Hello everybody, December 12th, 2022. Let's take a look at Bitcoin's action. First up, what I said on Friday. Title of the video, Chop Suey. First thing that I said was expect a heck of a lot more chop. We saw the bears fail to capitalize on the setup downwards, and now we really don't have bullish follow through either, but multiple different scenarios, but basically, chop is what I was predicting, and obviously we have seen quite a bit of that. So I said in that video, I expected it to move up higher because the bears only did this three-wave move down here. So I was expecting, probably to come up, maybe test the 17.7 area. It's hard to say exactly where this is going to go because there's just so many possibilities of what it could potentially be doing, and none of this is really good quality action. So I don't expect it to follow through in either direction in a significant way. I mean, this can go up to 18Ks and still die. Even if it gets up there, it's not a slam dunk for the bulls because the action is just atrocious. So anyway, I was talking about at the time, I expected to get up there to 17.7, but it really doesn't make sense to long because, your stop has to be below there. At the time, it would be entry there and target there. It's basically a 1-to-1 risk-reward ratio. Now, over the weekend, on Sunday, when I saw this drop, and it dropped in yet another three-wave move, I took longs at that point, because that was very good risk reward, which you can see here. I entered literally 16,875. I got in right there. So that was pretty cool. Stop loss is right there, 16,675, and target probably looking for about 16.5 or 17.5, 17.6. So right from that entry, I've got a 3-to-1 reward to risk ratio. So that is much more favorable than what I was talking about before if you'd entered up in this region where you're basically 1-to-1 or worse. So again, it's the power of technical analysis, and especially Elliott wave analysis, is that it really gives you those areas that you can focus on for longs, for shorts, for giving that good reward to risk ratio, and that's the key to consistently making money. So anyway, I am long. I do have break-even stops on that already. So if it does go back down to that 16,875, I'll be out and I'll go back to waiting. This can die at any point. We can certainly see this head down. It's already done essentially an ABC here, so it can break down at any point. However, as I said, the bears really failed to capitalize on that, so I do lean in favor of getting up there. How exactly it's going to get up there is an open question at this point. If we draw a fib extension from just this local area, this local low to the local high down to the new local low, it gives us a new sort of danger zone we can use for maybe this is yet again an ABC, and that danger zone is right about there. So you can see we're once again overlapping with some of these other areas. So I lean in favor of getting up near 17.7, north of 17.5 anyway. I don't know that we get much beyond that. It's possible, but I doubt we get much beyond that, but you never know, so we'll see. I'm taking the majority of my profit in that 17.5 to 17.8-ish area, give or take. Just give it a little extra room up there. And we'll just see what happens. So I probably won't short there until I see a new move down. If I can see a new 5-wave move down, when we find a top here, we should see it start off with a 5-wave move down, and then the ideal time to short would be on that 3-wave move back up, because then we're getting ready to go back down. So primary scenario for me is still 12 to 14K at this point. The bulls' only chance really is one of two diagonals. either this is 1 and 2, we're therefore working on ABC of 3, then we'll see 4 and ABC up in 5. So we'd have a diagonal that looks like this, which is in red. Also possible that this is ABC of 1 in a larger diagonal. This would then go ABC. We'd probably come down here first a little bit here for a 2, and then choppy ABC up for a 3. So like I said, we could be making a larger diagonal like that. Either one of those is possibly bullish, but you know, you really, I don't trust diagonals to start us off. They fail more times than they succeed from what I've seen so far. Now that may change, you know, if we get back into a bull market, of course, then diagonals can be useful. But as of right now, we're obviously in a bear market still. We have been for over a year now at this point. So you just got to know the market that you're in, and once again, you know, kind of know what you're looking at. Know that if all you see is 3 waves down, it's usually a good idea to grab some longs. If all you see is 3 waves down, grab some longs, even if it's just for a scalp. And same thing on the way up. You know, in a larger sense, all that we see here is 3 waves up. So it's likely that we're going to head down lower. Obviously PPO, RSI on the hourly are getting overbought here as well. So that is telling us that a top is likely soon. Our 4-hour still has some room, so if the bulls get going up into this area, I would anticipate that the PPO will also, and the RSI will also move up, you know, as we approach the top. If we do get that momentum upwards, the PPO and the RSI on the 4-hour is likely going to be a good indicator of when our top is in, but we'll just have to wait and see. So not too much further to add than last time. You know, again, expecting more chop. I think the chop is most likely to be upwards chop at this point, but you never know, as I said. So stay safe. Break-even stops on longs are probably a good idea. That's where I've got mine, as I said. And we'll see what the rest of the week brings, see if we have better news on Friday. All right, guys, have a good one. I'll talk to you then.